Hey everyone, and welcome to the Tesla Fire Challenge YouTube channel. This is day 18 of 1000. So hey and welcome to the Tesla Fire Challenge YouTube channel. If you're new, welcome. I hope you stick around. If you've been here before, welcome back. It's really good to have you here again. For all my new viewers, this channel is about investing money and being all in on Tesla no matter what. So join me on my journey to make $1 million in 1000 days. That's right. I'm going to try and make $1 million in 1000 days. So in today's video, I'll be going through the following. I'll share my day 18 portfolio, even though the market is closed. I'm going to be looking at the Tesla 1-year charts to see how we can capitalize when the market's open tomorrow. I'll also be looking at potential buying opportunities, and also I'll be sharing my strategy to remain calm when the stock market is selling off and everyone is panicking. So let's get into it. So it's day 18, it's the 9th of January 2022, the market is closed. I've got two portfolios, Portfolio A and Portfolio B. In Portfolio A, I've just got under 118 shares. In Portfolio B, I've just got under 91 shares. So in total, I have 208.75849, so just under 209 shares. My target is to accumulate 300 shares in Tesla, so I'm about 69% there. A long way to go, but hopefully I'm going to get there soon. So price closed for Tesla on Friday, it was 1026.96. So if we multiply that by the number of shares that I hold, that gives me a portfolio value of $214,386.62. So that's 214,386.62. So the daily movement downwards has been $7,878.54. So not a great day, but as you know, the market is panicking. Everyone is selling off. So, we need to try not to panic and remain calm and rational during this time. So let's get into the technical analysis. So here is the 1-year technical chart for Tesla on the 9th of January 2022. So as you can see clearly, price has broken MA50. So it's going to be heading down to 1000, which is the next support line. So if we go to the next chart, I've marked it all up. So I've got my trend lines T1, T2 and T3. Those three still remain intact. Then I've got my next downward trend line, which is T4 and T5. So as you can see, price has headed under the T4 trend line and it's going to hover between T4 and T5. My next support line I've marked as S1 and S2, and then after that I've got S3 as well. So here is the moving averages convergence divergence indicator for Tesla. So as you can see, the MACD histogram is showing a lot of weakness. It's about to cross over to the negative territory. Also, as you can see, the black line is about to cross under the red line, which is a bearish signal, and it just implies that there's more selling pressure to come. So here is the 1-year RSI relative strength index for Tesla. So as you can see, the black line is going under the 50 level. So this means that there's a lot of selling pressure. So potentially Tesla could sell off even more. So where is the price headed? So as I said yesterday, price has broken MA50 and is likely to go to the next support level at 1000. Price should bounce back at 1000 if there is no more market weakness. But if there is weakness in the market, it's good to know where to buy more. So I've got my support levels marked up. So I've got S1, which is 1000. So if the price heads down to 1000, I'll be buying more. If it goes down to 950, I'll be buying even more. And if it goes to 900, it's a sale, and I'll try and accumulate as much as possible. So I wanted to get into the stock psychology for a moment now. So there's so many times when the markets have sold off and I started to panic and I sold my position and I realized a loss. And then eventually after a couple of months, the market started to recover again. And, I could have remained invested and made more money, but I actually realized a loss instead of a gain. So what we need to do is we need to remain calm and rational. So how do I remain calm when the market is selling off? That's the question you have to be asking yourself. How do I remain calm when the market is selling off? So the first thing I do is I don't follow the crowd and sell. I don't sell straight away. As soon as I open my account, if I see everything is red, I don't hit the sell button anymore. I used to do it before, but now I've trained myself not to do that. I don't follow the crowd. I don't sell when there's selling pressure. So I try to not make decisions there and then. I try to remember my strategy. So the next thing is I find out why the market is selling. So I try to gather all the facts together and I try to find out why is the market selling. Can the market recover from this incident? And most of the time, like 99 100% of the time, the market always recovers. It does take a bit of time, but it always recovers from a market sell-off. So then what I do is I revisit my investment thesis. So for Tesla, I revisit my investment thesis. If the market is selling off, if Tesla is selling off and it's down 20%, I revisit my investment thesis to see if everything is still valid. If everything is still valid and Tesla is a viable business, as nothing has changed, they've still got their long-term targets, they're executing, they're performing business well, then this is something that I always look at to remain calm. So I always remind myself of my long-term targets as well. So I look at my price targets and remind myself this is where I think price is going to be heading to. So there's no point in selling now and realizing a loss. I can just remain invested over the long term, and this is just a blip. So here is the Tesla 10-year weekly chart. So as you can see, I've marked it with the red line. So every time Tesla has decreased or fallen more than 20%, I've marked it with a red line. So as you can see, over the last 10 years, Tesla has fallen 20% or more on 15 different occasions. So again, it's not going to be plain sailing. So I'm not expecting a straight line. I'm going to be expecting volatility. So when there's volatility, I'm going to train myself to think, this is a buying opportunity. So don't sell. So I look at my Tesla price target and portfolio expectations. So for example, in 2023, I expect the price to go to 2,200. So if I have 300 shares, if I manage to accumulate 300 shares, my portfolio will balloon to 660,000. By 2026, I expect Tesla to go to $4,200. So if I keep my shares, I don't sell, I remain invested, then my 300 shares should go to about $900,000. So it's very, very important to revisit your price target, to revisit your investment thesis. So it just helps you to remain focused over the long run. So now suppose your investment thesis is still valid. What should you do? So that is the most important question you should be asking yourself. Your investment thesis on Tesla is still valid. The market is being irrational. It's just selling off for no reason. How do you take advantage of this? How can you capitalize when everyone is panicking? If you know how to capitalize when everyone is panicking, then you'll be very successful in the stock market. So what I try and do is have at least 10% cash on the side or raise some cash. So basically, if I have some cash on the side and Tesla goes on sale, it slides about 10-15%. This would be a great opportunity for me to lower my cost basis. So another thing is you should definitely know the key support levels of Tesla and buy every time price reaches that level. So I'm going to be sharing with you my support levels for Tesla. So every time it reaches that price, you can potentially add more. So I've got all these price levels marked up. So as soon as it reaches those price levels, I'm going to try and buy more shares. So my aim is to hit my quantity target. So what I mean by that is my target is to accumulate 300 shares. So whatever's happening in the market, that is my target. As long as my investment thesis is intact, my target is to hit 300 shares. So I don't mind. I'm not too concerned about the price fluctuation. Price will go up and down. Yes, it is painful when the price goes down. Yes, it is really nice when the price goes up. But my ultimate target at the moment is to hit 300 shares no matter what. So my important target is to hit 300 shares and to lower my cost basis at the same time. So if I factor in both these things, the best way to do this is to buy when the price is low. When the price is crashing, that's when I should go in and try and accumulate as many shares as possible. So what are my buying levels? So I've got my chart up here. This is my 1 year daily chart. So I've marked this up. This is on my wall. I've stuck it on my wall so I can see the price levels clearly. So my first level is S1. So when the price hits S1, I will be buying more than usual. So the price is at 1026 at the moment. By Monday it should, when the market opens and there's weakness in the market, price should fall to 1000. So when it's gone to 1000, I'm gonna be buying more than usual. If there is continued weakness in the market, and the price drops to S2, which is 950, I will be buying even more than usual. And then this will go on. So if it reaches S3, which is the next support line, so that's 900, I'll be buying even more. And if it hits S4, which is MA200, that's $793. So that's another key support level. So if it hits that, I'm going to try and accumulate as much as possible. Remember, my goal is to hit 300 shares and to lower my cost basis as much as possible. So as long-term investors, this should be your main target, to accumulate quality companies at really low prices, to hold them over the long term so you can realize a big gain. So what are the key points that you should remember? So the first point I say to myself is don't panic. I say it 3 times here. Don't panic, don't panic, don't panic. Whatever you do, don't panic, because you're going to make irrational decisions that you're going to regret later on. So the next thing I do is confirm that my investment thesis is still valid. So I look at my long-term charts again. I look at my price targets again. So once I've calmed myself down, then I can start to make rational decisions. I try to raise cash to take advantage of the market overreaction. So whenever there's bad news, the market always overreacts. So if there's bad news and the real reduction in price should be about 10%, the market would probably sell off 30%. So this is a great arbitrage for long-term investors. So if we can accumulate more Tesla shares during this time, it's like a great opportunity for us to hit our quantity target and to lower our cost basis. So the next thing is to know the key support prices and to buy and lower your cost basis. So I know these key support prices off by heart. So I know exactly where the support levels are. So I'm hoping that, Tesla crashes to this price, to that price, so I can buy more, hit my target of 300 and then lower my cost basis. Because the last thing that I want to do is to buy Tesla shares at expensive prices. I don't want to buy one share at $1,500. I want to buy one share at about $800. So it makes sense to me in my mind to lower my cost basis. I'm not too concerned about my portfolio at the moment. I've still got a long way to go. I've got like 1,000 days to go. So I'm not too concerned about the time horizon. My main concern at the moment is to hit that 300 target and to lower my cost basis. So the last thing is just to remain calm and rational. Just remain calm and rational, because if you become irrational, if you become emotional, then you're just going to hit that sell button and realize that loss. So that paper loss will become a real loss. So just think in your mind that this is just a paper loss. Think about your investment horizon. Think about how long you have until you want to reach your goal. And there's no point, as long as your investment thesis is valid, there's no point in hitting that sell button. So just think of it as a sale over the long term. So I hope you found this segment useful. It's really helpful for me to remind myself, and hopefully you found it useful as well. So for anyone who's interested, I'm in the UK and I invest money in a tax-free ISA account. I use the FreeTrade ISA app, and it's definitely worth checking out if you're in the UK. It has a very simple interface and a cheap monthly cost of £3 per month. You can buy and sell shares commission free, and there's immediate deposits from your bank account. There's a huge variety of stocks and shares to choose from in the US and the UK. And what I've done is I've left my referral link below in the description. So if you sign up, you could get a free share worth up to £200, and I'll also get a free share too. So thank you for that. It's a win-win situation. So make sure you take advantage. Every year in the UK, the government gives you a tax-free allowance, so you can invest about 20,000 every year, and any gain that you realize, you don't have to pay capital gains tax on this. So a lot of people that I know invest their money in general investment accounts, and they don't take advantage of their ISA accounts. So make sure, before you do anything else, top up your ISA to that £20,000 level, and then every year, whatever gain you make in that account, you won't have to pay a penny in capital gains tax. So yeah, join me. I hope you enjoyed this video. I hope I brought you value. I appreciate any likes, and I'll read all your comments. I appreciate your subscription. I hope to bring you value. I will do technical analysis every day. Hopefully it will be getting better every day. I'll be using better software, better charting facilities. So watch this space. And I hope you enjoyed this video, and I wish you all the best on your investment journey. And until the next update, have a great day, and I wish you all the best.